Hey guys, what's up? In this video, we're going to talk about support and resistance and how to use it well. So I'm just going to jump into trading view and into the charting, and I'm going to go over the nuances of support and resistance. I hope you enjoy it. Just remember to smash the thumbs up button and subscribe. And that way you'll get to know whenever I've posted a new video or whenever I go live, you'll get an alert directly into your inbox. Okay, enjoy the video. Okay, welcome to another edition of Learn to Trade with Tony. Okay, in this video, we're going to talk about support and resistance and how to use support and resistance well. If you don't know what support and resistance is, well, it's an area that supports or resists climbing or falling. So for example, you have a chart like this, and your prices go higher, and then they run into trouble at a specific point. They run into trouble again and again. They continue to run into trouble. That would be resistance, and that's where a lot of sellers are coming in, and it's resisting going higher. It is the way to think of it. Now, that same level could also be support down the road. Maybe we continue to sell off and we find that area to be supportive. There's a lot of buyers there. There's a phenomenon called market memory that levels will offer resistance, and then once you finally break above it, a lot of times it will offer support. Now, there's a lot of reasons for that, and the first one is that anybody who was short selling at this point is more than happy to get out with a small loss after they've been blown out a little bit. So they have to turn around and buy. Another reason is that people may have missed the initial move and they see an opportunity to get involved at a clear breakout level, and they go ahead and start buying here as well. And the third reason is the institutional side. You may have an order to buy 50 million shares if you're a hedge fund or a deal desk or something. So you've got a huge basket full of 50 million shares, 10 million shares, whatever it is, whatever it happens to be, and you only get 3 million filled here. And you have a target of, in this case, say 210. Customer wants to buy at 210 or as close to possible. And you get another 2, and then it balances, and another 4, and then it balances, and then finally you get your last million shares filled there. That's when you're seeing here a lot of times. So again, it's where price gets resisted. That's resistance, and supported where buyers come in, and then market memory dictates that once the ceiling will now become the floor. And you can also think of the high rise. So we're bouncing around in here, and we jump to the second story. Well, now the ceiling is the floor, and the floor is the ceiling, the third story, etc. It works both ways. So if you fall, that ceiling becomes the floor, and the ceiling becomes the floor when you fall down the next level. Okay, so what's the importance of support and resistance? Well, the importance of support and resistance is where buyers and sellers come together. Think of it as your roadmap for where the market may go. Okay. There's no such thing as trading and ignoring support and resistance. Well, unless you're basically gambling. Support and resistance is the very basis of almost all technical trading. You can draw support and resistance very easily. In TradingView, you click on the trend line, go to the horizontal line in the submenu, and you can plot that line. And you can drag it back and forward. And in this case, you can see that there are buyers right around here. You can see several times the market tried to break down below there, but the buyers continue to return. So that's a clear sign of support. You can also look at this area. This is resistance. You can see that we just couldn't break above it. And also submit to you that sometimes it's a zone. So you can see that clearly there was an entire zone where the sellers were keeping the market down. And then we broke out, and you can see we retested what was once the ceiling became the floor. So market memory, as I have mentioned previously, is very evident. So how do you determine a breakout? Well, there's a lot of different ways, and for this, let's go ahead and use a very simple example right away. Okay, so I'm going to go ahead and change this to 195, because one thing you'll find out about support and resistance is that it tends to form around round numbers. like 195, 200, 250. Those are very important numbers, but it tends to be around even levels. Okay, let's go ahead and jump down to the hourly chart, and I'll go ahead and I'll zoom back. You can see, well, one way to determine an upward breakout, this is the easiest way, is you just gap above the resistance to kick off and the day, and then that's obviously a strong move, okay, a strong breakout. And you also quite often have that market memory that I mentioned. So, for example, you can see, I'll go ahead and zoom out here, and you can see that this resistance here got broken down, got broken through. But even down the road, you can see the market memory. So once you break above this obvious resistance area, because you can see what price continues to flip back and forth, we jumped above it and then found support. But a lot of times what traders will do is they'll look for a scenario. I'll go ahead and draw this with these drawing tools, okay? But they look for a scenario where, you know, there's been a lot of resistance here, and then we finally break out, and what they look to do is buy the pullback. And that shows sign of support, because all of those reasons that I mentioned previously, the same thing in a downtrend as well. So we finally break support, and then they'll start shorting it right around that level. Okay? The reason is because a lot of people that are on the wrong side of the trade are going to have to reverse in your direction. So for example, let's go ahead and let's zoom out a little bit. I'll show you how this can play out. We had a break in this area here, and you can see that the price pulled back just a little bit, and then it took off. Okay, and you'll see that over the longer run, the price will return to the areas. You see that resistance there? It broke through it. But interestingly enough, as you can see, price, it couldn't get back up there. So that we broke through that support level, we tried to get there, and we saw negativity again. So that would be the pullback in the short area. Okay, I suspect that somewhere, yeah, there you go, right there, a previous support resistance has offered support. So for those who missed that move, they were paying attention down the road. They would recognize that there was a lot of support there where they would look left, and they would say, well, this is an area that's been important previously, and that's what we're waiting for. So wait for that pullback, and then you clearly, you know, looking for that move when it comes into play. You can see that there's a lot of back and forth between the main areas, and there's something to be said just for the round numbers. So for example, you can do things, you can experiment with this. Just go ahead and put a couple of round numbers, and let's just see, let's just quickly looking at this. Okay, I'll go ahead and I'll do 150. So those are all round numbers, and these round numbers attract a lot of attention. They're the psychological levels. Okay, so I'll zoom out to the weekly here. If you can see, you can see that 130's occurred a lot of resistance. 140's occurred some support, because we've bounced from there. 50 was resistance, and it turned into support a couple of different times. You can see how this goes backwards and back and forth. Okay, there are a couple of other things that I would add, some caveats. What you really want to see is a breakout with volume. So I'll go ahead and I'll put that 150 back up. Okay, let's go ahead and zoom in. Zoom in on the hourly chart, and I'll have to scroll back here, but what we're looking for is some pickup in volume at one of these moves. Okay, so this was a pretty strong volume as we got here. This was a nice reversal candle setup, and you can see the volume is picking up to the upside. and then we really peaked here, and then we in this gap. So it's a good sign that the uptrend is going to continue. Remember, can't stress this enough, you need to be looking at the uptrend from the longer term standpoint, not just the last couple of candles. That doesn't matter. Big massive green volume spike here on this green candle. That was the first sign that it was probably going to hold, and you can see that in fact this volume is very crucial because it shows interest in the market. Now, what time frame to use is something that is of personal preference. But again, I'll point out that the higher the time frame, the more reliable the support and resistance. You can just simply drill down to a shorter time frames that you're more comfortable with. Okay, so for example, if you have an area on this one, JP Morgan, that you're paying attention to, and you look at it and you say, okay, I want to get the best entry possible. Well, in that scenario, you can look towards a shorter time frames, and that really comes down to what kind of time you have. So, for example, I'll go ahead and I'll draw this 110. I'll zoom in on the hour and let's see what we can see. There was a shooting star right here, with a gap just above that area. Once you broke the hangman, there's plenty of volume to the downside still. So a 1 hour chart would have been very reasonable to me. When I look at this, it seems that there's about a $1 area as you zoom in on these lower time frames that just seems to be a zone of resistance. So the shorting made sense. And at this point, you're a couple of bucks to the good. You could also go to say 15 minutes and then start to look for signs there. So there's the hanging man and a very negative candlestick. Volume isn't going to be as high on the 15-minute chart, obviously, but it is a technically viable setup. And the beauty of using this is that your stop loss could have been at the 111. Your entry could have been, say, 110. You're risking a quarter. You could be risking 75 cents. And that's that kind of point, okay? So you drill down for ever-increasing granularity. You can tighten your stops, but it all needs to be in the context of the higher time frame. So 110 matters on the short side or on the long-term chart. So I showed you that earlier. So this is a bearish candle. There's another bearish candle, and then there's another one there. So really, at this point, you could have shorted there, breaking this 3-candle reversal, or a 4-candle reversal for that matter, at 1040, stop loss at 10, 40 cents stop loss there, so you can cut your stop loss from 75 to 40 cents. So it really is reducing your risk, okay, because you know what's going on in the big picture. And then we zoom in for the granularity, okay. So with as little as a 40 cent stop loss on this, you're talking about strategies, okay. On the breakouts that you're looking for, that's the overall attitude of the market. Perhaps ranges that may or may not matter. As a general rule, what I like to see is once I've reached 1-to-1, so let's say in that 40 cents in that example, so I'm risking 40 cents on the 5-minute chart. Well, once I'm up 40 cents at that point, I'm at break even. There's no point losing because you're at 1-to-1 there. Then I just simply drag my stop loss along with me, maybe moving up every 10 cents or so, and that's one strategy, okay. If I know that there's a target that's attracted a lot of attention, let's go ahead and change our stock chart. Let's see. Let's go to Citigroup. Let's go to the daily, and this will be easy to see from a daily chart, but it will tell you the same story. For example, take this reversal candle here, and I know that there's a lot of resistance up here, then I take my profit there, or at the very least, regardless of what happens, I'm break even. There's no need in taking that loss. Let's go ahead and look at a couple of other examples before we move on, so that we get this down, okay? This is T, and this is a daily chart. But you can see it has major levels drawn out, and you can do the same thing on short-term charts. If you would take a short right there, you could write it all the way down to 35. Let's go ahead and move to the 15-minute chart. Let's see what we have. A nice grind here. One simple way to take a trade in this, or to manage a trade in this, is to recognize that the last swing low. So we had a swing low. If you were long here, for whatever reason you decide to go long, you pull back and then you bounced again. Well, your stop loss can move up to the last swing low. Eventually, the market will tell you when it's time to get out. There's those three strategies: that the one-to-one, you do the next major area, and I'll just put that as M, MA, or you trail. You trail your stops, okay? And then there's the swing lows or swing highs. Those are all three very valid ways to manage your trade. Okay, so that you can take advantage of support and resistance, and dynamic support and resistance, how it continues to form in the market. Trailing stop, I'll draw some lines, down here. Got a perfect hammer, nice volume. Could have taken that, and we rally. We come back up. Once we take off from here, we make it a fresh new high. Your stop loss goes there, high here, there, low, and you might get taken out there, okay? It comes down to psychological comfort, but clearly as a day trader, you can make nice little bits and pieces out of the market following this trailing highs and trailing lows, okay? Stop loss placement, which I do like to do it in a trending market. It just depends on how the market's moving. If there's a lot of volume, if it's a steady trend, sometimes it's not. So that just comes down to the experience. You recognize that there's a place that's going to be massive resistance, like say up here, because of the gap, and the spike high, is that's where we're going to be taking profits. Especially if I got him way down here, there's no point really risking at that point. Okay, it's more or less a comfort thing. There are two major things that you need to know about trading from a psychological point of view: support and resistance. Support and resistance.